Good morning. And let's look at what the daily plan is for today. Heading into a holiday shortened week, 3.5 trading days, Wednesday being a half day, liquidity thin, nice playground for algos to make mischief. And let's see where we are. Now, before I even get too deep in the weeds here, some of you might recognize the IC whale icon here, called by others Captain Condor. I spied him first a couple years ago, so I'm sticking with my IC whale name. And he stole the 68.60, 68.65 call credit spreads, which are now in the money. We'll talk about the dynamics of that later. I'm just going to guess most of you watching know what that means. If not, we'll kind of maybe circle back around to that. And so basically, if we can stay up here, this area kind of becomes a floor, kind of becomes a potential floor, which is interesting. Okay, so what I want to do today, something I haven't done before. So this is my daily plan that my subscribers get. Okay, so we closed at 68.35, above the 6,800 into MOPEX, important number at 6,800. About 1% off the closing all-time highs, now less. Intraday closing high was 69.20. Intraday closing high was here somewhere, but not far. A percentage, let's call it, among friends. There's general metrics, stocks above that 20 and 50-day moving average. Actually, I should say 200. That's a little bit over 50%, so it's not overbought, not oversold. Even though some people might think we're overbought because we ran so much. Remember, we dropped so much. And so really, if you just look at broader market metrics, we're like, okay. What about the vol picture? VIX has come down from 18, wherever it was last week, all the way down to, not even ready to have a Sweet 16 party. And I've heard chatter and seen people thinking or maybe we should go long vol, or VIX is too low, or we're at the VIX low. It doesn't exactly work like that. As I often like to say, and I have an educational post about it, VIX is not math. VIX is math, not a price level that's traded. That said, the vol picture is actually pretty supportive right here. VIX curve is a healthy contango, a nice swoosh, with further out being higher volatility like we want. Short week means we get extra theta burn. That's good. It's charm. We'll call it theta burn. So where are we now? We're back in the range. 6,900 is right above us. The put-call ratio, that's a McMillan thing. He likes to talk about that. It's kind of rolled off its peak, so they're not buying puts crazy, and they bought overpriced puts, which is even better. Was OZK better? They're starting to buy calls, but we don't have crazy call skew yet, and calls are cheap now. By the way, with vols at 15, 16, calls are cheap. So what's my year-end setup? We had Q4 MOPEX. We had the big quarterly options expiration, which the people on Twitter or FinTwit in general like to say, $10 billion trillion, the largest aspect in the history of mankind since the beginning of time. That's hyperbolic. as the index goes up and as we have lots of deep in the money calls or way out of the money ones, if you add up what they're worth, yeah, that's trillions notional. But really, we had the same few billion notional that's in the band around where we're trading that matter. Maybe a little bit more, but that's because clickbait. So let's not get crazy about that. So the MOPX, but it is big. The Q4 is the largest index options expiration. So it's big. It matters. It mattered. It came and went. We opened at 67.89. Shameless plug. You can go back and look at the video. I said we're going to open at 67.90 when we looked at the options. So anyway, the VIX expiration is behind us. I think some of last week's craziness was related to the VIX expiration in combination with other things. And so now all that's behind us. We have the JP Morgan collar sitting up at 7,000, and we'll talk about that. Briefly, what that is JP Morgan has a large hedge fund. I'm not sure what the minimum buy-in is, maybe $250,000, maybe $500,000, $1 million. I once looked into it. I'm not giving them my money. I can do it myself. It's pretty easy to set up. But what they do is they buy a 5% out of the money put and sell a 20% out of the money put, making it a 15% wide debit spread, meaning that the most you can lose is 5% over the next 3 months, unless we're down more than 20% at the expiration. The reason they pick that is based on their studies. Even if we go down, we don't stay down 20% for 3 months running. Or we do 1% of the time, whatever the numbers are. It's on their website. And to finance that, they sell a call. Usually it's about 3% out of the money. So if you did this strategy with SPY and it worked out all the time, you'd make about 3% a month times 4 is 12% a year. You're a high net worth individual. You make your 10, 12% a year, better than a bond. You give JP Morgan 2% management fee and 20% of the profit. So you go away with 8, 9% and you go on your yacht and you play golf. That's what this is for. But why it matters to us, God bless JP Morgan, is, and let's switch gears for a minute. Which gear are we going to go into? We're going to this gear for a second. Why it matters is, you see this up here, these 7,000, these calls. When market makers sell calls, when customers sell calls and market makers buy them, or puts, but with positive gamma, yes, we mean revert off of them. As we head up, we push off, then we go down. But then as we go down, we get pulled back up toward it. We get sucked back up toward it because as we go up, the market makers are trying to balance their delta. So we're going up, they're too short. Oh no, we got to sell. But then when we move down a little bit, oh no, now we're too short, we have to buy. And that creates that pretty much mean reverting flow right toward these levels. These levels can be on the downside too. We can mean revert down to those levels too. When you have big chunky levels like this, especially the JP Morgan quarterly, we got sucked to it again in September. I was talking about in September when whatever the beginning of the September sell-off, we had a crazy sell-off, and I think the collar was around 67.50, and that looked insane that we would go up that amount until the end of September. I think, if my memory serves me well, we pretty much clocked the collar. Big yacht if you can play golf on it. There you go. I was reading something, actually a friend of mine was, somebody went out, some like rich guy went out on Bezos's yacht or something, and the guy said, "Okay, I'll just pay the gas money," and the gas money was $500,000. So next time I go out on your yacht, bad hombre, I'm not paying your gas money. Okay, so that's the dynamics of the JP Morgan collar. And so where are we now? Let's go back to well, let's just I hadn't planned to do this, but I'll do it real quickly. Let's just kind of walk through time here. Let's do a little march through time. So right now we're right about here, 68.60, right? All-time high, closing all-time high is up here, 6,900-ish. The intraday all-time high is up around here, 69.20, 25. I think it's 20. And as you can see, we have sold calls up here, so it's going to be hard to get there. But at the same time, we have a drift up toward there. We have getting sucked up toward there. And maybe we have a few days till Christmas, where it's going to be harder to make a new all-time high. But here, look at this. We have a couple days until then, but on Christmas Day, suddenly there's a path open between 69.80 to 69.15. If we can get over 68.80, which we might today, all things being equal, then we might have a path up there. Suddenly the dynamics start to flip, and we have a potential path up here, fighting through the 69s and fighting through here till JP Morgan Day, 7,000. That's a possible path. Is that the only path? No, of course not. There's paths where we just stay stuck. There's paths where we, a little bit of a downside, not much of a downside path. But at the same time, there's not much to support us should we hit a down goes Fraser. Here we have something at 6,700, 6,650. Let's look at 6,800. Looks pretty chunky right here for the end of the month. 6,750 and 6,700 magnets. Should that break? So if below 6,800 into the end of the month, unless the cavalry shows up, it could get a little dicey. So, buyer or seller beware. Okay. And if you like this kind of babble, that's what you get in my Discord. Probably more of it than you want. Okay. Okay, so now the long hedge puts decay into the year end, creating the charm effect. Those same potential landmines, going back here, those same potential landmines over here at 67.50, let's say, or even right here at the money. What happens if we're above them? Everybody who wants to answer, raise your hand. Okay, too late. If you're above them, they decay. Market makers get to adjust their hedging and buy back the shorts, pushing us up. So the natural drift of the natural collar structures that institutions do, selling calls to buy downside put protection, is a drift up. The natural tendency is a drift up. So that's where we are. Okay, so now let's get to the IC whale. So the IC whale, I mentioned before, his long calls got violated on, his short calls rather got violated on Friday. And so following his strategy, it's a martingale progression, not a straight martingale progression. It's 1, 4, 10, I think. I was able to figure out his progression just by tracking him. And so now he's at level 3, I think. He's at level 3. And so he has 15,000 contracts there. If he gets skewered, harpoon, fine, he'll be back tomorrow with around 35,000 contracts or whatever it is. If he gets harpooned again, then he'll be back on the holiday shortened 3.5-hour day with about 65,000-ish contracts of an iron condor, if that. So, get your popcorn. So Monday moves against him. He adds size, more than double, more than simple double into Tuesday, whatever. Okay, so the bottom line, though, for the whole thing is we're stuck in this range that we've been in. So let's get back to here.
So, Doc, I have a question.
Sure.
Last week, on Friday, you were talking about, due to the holiday shortened week and that sort of thing, that even though VIX is low, VIX may stay suppressed. And now you're talking about IC Man. Of course, there's the assumption that he'll get harpooned today. But the potential for him to start martingaling kind of supports this idea that VIX may stay suppressed through the holiday week. That's kind of my reasoning.
Actually, that's a good observation. With the naturally dampened volatility into this holiday week, if we have somebody who's going to systematically be selling volatility, that's going to put a lid on something that's already got a lid on it. And so that's a great observation. And he's mechanical, so he doesn't care if VIX is 50 or VIX is 5. He doesn't care. Don't confuse me with the facts. I'm going to sell a 5-wide iron condor on both sides, roughly getting a little bit more than a third of the width of the spread. 5 wide, he wants $1.70 to $1.95, $2. If he loses, it's like a 2 to 3, whatever it is, a little different risk reward, and he just keeps doing it, and that's it. Everything else is agnostic. He looks to get equal credit on both sides, which I think is one of the big flaws in his method, because natural put call skew, he's selling calls closer. He's selling maybe an 18, 19 delta put and like a 22 delta call. And now I don't worship at the altar of delta neutrality, but just common sense, you don't want to sell the cheap calls. If you're playing the expected move, that's not a great way to play it, in my opinion. Okay.
Now, I have a question, Doc.
Yeah, go ahead.
Since I'm sure this will transition into my screen soon, what is your downside? What do you see for downside?
Okay. So for downside today, 68.35 where we opened would be the first downside target. So if we get out of here 68.50, which is about 10, 15 points from here. I'm not sure how much we moved, 10 points, maybe 5 points. If we break 68.50 and don't stay stuck in that area, so 55 points. So I guess subtract 50 points from where, to get that same number here. So that would be whatever it is, 50 points. Not 50 points, the number 50. So like 5, 10 points lower. But if that should break from here, I would say down. Let me pull up a chart. So from here, I would say down. Okay, so we're already at 62. So if we, the first downside would be around 10-ish points from here. The next downside would probably be 20, 25 points from here. I think that's pretty much it. The extreme downside from here would be, say, 40 points.
Got it.
I don't see that happening.
I asked because, I hate to give devil's advocate position here, but I'm quite concerned for downside today. I'm honest with you. You guys haven't seen me chart it like this, but if we break 6,900, we might have a little bounce here. But depending if the bounce is short-lived, I really think we can come down.
So 6,900 is 6,850. And yes, and we'll talk about that. Do your thing, and then I'm going to bring it back to Gamma and we'll chop it up a little bit more.
Great. So first thing I'm saying here is, do we hold this sticky level I have, 69.15? That's critical for me, but I don't think we're going to hold it for too long, and I think we might even come up to 69.30, reject from there. If that doesn't happen, what I'm going to be looking for is price to come down. I'll wait to see if we actually can bounce here, or if that bounce is going to be short-lived and we start to come down. If we start to come down and we break that 6,900 floor, I think it can get quite ugly. 69.85, 87 will kind of be another line in the sand, but I think the wave will kind of wash that away really quickly and still see more downside today. That's just kind of my bigger kind of bigger scope view of the market, and I see a lot of weakness to the upside right now. So these are the kind of the things that I'm saying here.
Can you repeat, what did you say to the upside? You see a lot of potential or risk?
Risk.
Interesting.
I see a lot of risk. Now, it's not that I see risk to the upside if we just go up. I see risk to the upside if we break below 6,900.
Okay. So
If that's a better way
now
to say
let's
it.
bring that back. Now let's bring that back to Gamma for a second.
Yeah.
Okay, finish up your thing.
No, that's basically it for me. Really being careful to be too optimistic today into the Santa rally, if that's what you want to call it.
Are you saying there's like a bull trap mode?
Yes, that's the best way to put it. Yep.
What's the trigger
Okay.
level? What's the trigger level?
So a rejection level would be 69.30 for me, or a break level of 6,900. Might not need a rejection, if that makes sense.
6,900 is above us.
Yes,
So you mean we break it and then we fail it?
correct.
Oh, okay.
Okay.
Sorry.
Now let me jump in here and referee. Okay. So we're about here.
Doc, by the way, I have nothing to say now because he said what
I
I
know.
was
I was
about.
just kidding around.
No, I mean it. He basically we share for some reason the same view.
I love it. I love it.
Okay. Great minds think alike. Okay. So here's the Gamma setup. Okay. So now, yes, if we break 68.50 based on the chart, there would be a big void below. Let me just pull up a chart for a second. If we break 68.50, especially if we go up here, we see all. It's actually better with the continuous. We see, okay, you don't have to be a great chartist to see that if we break over here 68.50, there's a price void down to here where we gapped, and maybe back down to 6,800 where Friday was. Okay, pretty clean chart setup. What muddies the water somewhat, or changes the clarity of the water somewhat, or adds clarity to the water, I should say, is the Gamma landscape. So let's walk through this for a second, and let's start off. Rather than starting off where we are, I'm going to start off at 68.50. Where we were at 4 o'clock or whatever, or mostly overnight session. As we go up to 68.50, market makers have to sell, but then as we move away, they have to buy, sucking us back up. Big bar. We move away further, and they have to buy. So we get sucked up to the bar. Let's just say somehow vol increases, Trump says something, whatever, and we break below, here's 50, we break below 35, 40, we break down into this area of Friday's close. And you see there's basically nothing here, 400 contract, these are tiny numbers. So let's say we break down into here. Well, then, from a gamma point of view, there's a little magnet down here at 68.20. And right now we're at 69.70. So 55 points difference. So about whatever that's 50 points lower. But by the time we get here, this is as we head down, market makers are buying. So this is going to cushion the acceleration down. Could we get down to 30, 35? Sure. But we have a big cushion here stopping us from going down. Now, if customers come in and start buying puts at 68, 25, 35, whatever in size in a thin day, that could pull us down. On the other hand, it looks to me, especially since we're over this, got a pretty clear gamma path up. A little stall at 80, 75 right here, around number where we would expect it. So now what happens if an algo and, the algo overlords and the seek and destroy bots and the weaponized gamma people come in and run the math with their programs and say, if we buy 2,000 contracts of this delta and this gamma at 68, 75, 80, or buy a debit spread here, guess what? That keeps the acceleration up, and this becomes a floor. So we'll call it the 50-65 area. It's going to be a key battleground. And if we could stay above it for a period of time, kind of ends up being the main area. And if we come back below it later in the day, then we get sucked back to it. So main downside, a flat day. Maybe a slightly red day, 25, 30. We don't see 6,800 today. So let me show you something else. So here, I kind of took that same thing and annotated it, showing you, okay, so the arrows, it makes sense to me. And, hopefully to me, this is as clear as day.
A visual representation of Doc's processing right here.
Exactly.
Looking inside the mind of the man.
You're getting an MRI of my mind. Okay. So,
to make it sensible for other Doc, you only need a green dot that shows where this starts and a red dot that shows where this ends.
Yeah.
Okay. So
Then like a regular mortal human being, we can follow that.
I will consult with my trusted advisors here about how to turn this into things that regular people would see. And this is a little more arrows I usually put on. But the reason I have arrows going both ways is just to illustrate that we get sucked up to it, we get repelled from it. And then what are the potential pairs? The potential pairs, we can go down and head this way. We can go down and head this way. We can go down and head this way. Could this break when we get to here? We're in the orbit of that positive gamma supportive zone where we kind of bounce off of there and also get sucked back down toward it at the end of the day. Could we somehow miraculously break 6,800, 6,795? Then the path takes us down here. The above path takes us most realistically to here, 75.80. X marks the spot that we have to get over. And is there a world in which we could go from here to here? Maybe. But if we head up here, then we get sucked straight back down toward here or toward here. When I say here, here is 60, here is 6,900, here is 75.80. I'm guilty of doing things that when other people are doing it, they say here, I go, where are you? I can't see. So, and that's basically the landscape for today. Liquidity is thin, weaponized gamma call buying and light tape and push price through resistance faster than it should, quote unquote. So what I mean by that is you might have big TA levels or bars that we shouldn't be able to break through it, or big gamma levels, but because of that, we could break through it. And we really talked about the contango supports to grind up. If we start pressing and holding outside 68, 65, we're breaking through and holding below 68 to the IC whale levels. Then the whale mechanics can amplify the moves in either direction, getting us sucked in, getting us pulled back. So that's that. And here's the TV string. So here, this becomes this. I don't know what happened to my little. Oh, I turned the labels off. That's what happened. Setting labels, show labels. There we go.
And just so you know, Doc, you got some positive feedback on that diagram. Ricky said that's an instant classic. It makes sense to me. So good for you. You learn to think like Doc, Ricky. You make a lot of money.
Okay.
Last thing I want to say, guys, is it is a short week. There's no news or data being dropped today. It could just be kind of a grind day, tough entries, not hitting your target exactly. So just I would play today a little bit more conservatively into the chest compared to other days.
Oh, yeah. And like I said, I'll just repeat that my daughter is going to be in town. So I'm just going to kind of not be around much. I'm going to trade what I have. I might set up a 1 DTE for tomorrow. Kind of trade that way because once I leave the screen at 12 o'clock, 11:30, 12:30, I might make a quick revisit for 2 minutes, but I'm not going to put 20 contracts up and say, okay, let's go play with the dogs. You know what I mean? I don't roll like that. So no matter how clear the setup looks to me, I've had clear setups before that turned away, and a story, gratefully not my story, but a sad story. A buddy of mine, we were in it. He was in a trade. I was in a similar trade. I closed. It was like a put spread, 20, 50 points below, and it was noon, 1 o'clock, and it was like 10 cents to close. And he literally went to the park to meet his wife and play with the kids. I had a doctor's appointment, whatever, so I left. I get a call from him. I'm at the doctor's office. What do? I forget exactly what happened. I don't think it was a Trump tweet. It was a something headline. And we just fell like a rock. Volatility exploded, and he was trapped in more than 100K when it was gone. That was it. So I close it. I don't leave them, no matter how sure it is. It could be, there's no such thing as 100%, and 99.999 to infinity and beyond is not enough.
That's a good lesson, Doc. Also, it's the holiday week, guys. I mean, spend some time with your family. Don't be so tied to the screens. This week won't make you rich, I promise you that. So wait to keep stacking them up.
Okay.
Lastly, guys, we are doing the
60. Gun to my head, I think 75. I think top of the chop, based on the gamma dynamics, not based on the chart. The chart says that we should kind of revisit this, but the gamma says we shouldn't.
And then the last thing I wanted to say, Doc, is we are having that promotion.
Yes.
We're doing 3 or 4 months for the price of 3. There is a link in the YouTube description, and then we're doing $1,000 off the price action boot camp if you're interested in trading with me and understanding my strategy. Those
price
two
action boot camp. Tell us more about the price action boot camp.
Yeah, so as you guys heard, Vol Trader, He does, I think he's doing similar things to what you're doing, but we end up almost at the same conclusion. I get to my conclusion just by looking at candles. So if you're trying to get a little bit more of a simplistic approach, or I would say elementary approach to making money a little bit faster, my strategy can definitely help you in that regard. So hit me up if you have any questions. I'd love to hop on a 10-minute phone call and see if we're a right fit for you as well.
Now, what about if I'm trying to be accepted to a prop firm and I keep crapping out? What can you help me with that?
Yeah, so prop firms, they require a low risk, high reward strategy. If you don't want to be churning through accounts and hopefully one hits. And my strategy does that. It's a very tight risk profile for a potential big win, just because I teach you how to move your stops and hold your winner correctly, not just based on confidence or courage. So systematic approaches, I think, are easier to follow. They remove the ambiguity to trading and just give you step-by-step approach on what to do if something happens.
Okay, so your strategy, your whatever approach includes money management and all that, and position sizing and the whole thing.
Yep, all of it.
Okay, I got a phone call coming in, and we got the market opening soon. So thanks everybody for listening. Happy holiday. I'll be around, but I'll be a scarce commodity, say around noontime, and see you all later.
All right. Good luck, everybody. Bye-bye.
Good luck. Happy holidays. Bye bye.